out here that you feel comfortable attending. So with that being said, we're just going to go ahead with the virtual meeting today, and I'll kick it back off to Ross and Pablo.
Thanks, boss. Yeah, and Ross, we've never really stopped being here at the office from day one, but we were adhered to the guidelines for us. Our entire staff is being held, so all of us here at the HBA office have never been back out. For our members.
Yeah, so all of our council members are going to be meeting back on their normal schedules starting at the end of this month, and any committee person meeting may also be held in person as well. A lot of those meetings are going to start up here at the end of the month. We're having a couple of our councils meeting next week. Our professional women in building and our 40 below councils both have in-person meetings. And if your household's getting a little stir crazy, we're going to be bringing you our June GMM, the Pitch Perfect Summer Picnic, on June 8th, or 9th, I believe.
Pitch Perfect Picnic. Sounds interesting. Tell me more about it.
Yeah, so we're going to have an outdoor stage for our members to showcase their karaoke performances. We're also going to be having a cornhole contest. I know some of you are avid cornholers, and we're also going to be having a pitching wedge contest for our golfers out there. So that way you guys can get a little warmed up for the golf tournament next month.
Yeah, it's a perfect time for that. With everybody getting ready for the HBA golf tournament, it's going to be held June 25th. So get your teams ready. There's some spots still remaining for your foursome to get in. So make sure you contact the HBA to get in to the annual HBA golf tournament. But Ross, you mentioned something about picnic as well.
Yeah, this is going to be a family event, and we're going to have food and fixins fit for the entire family. So bring them out. We'll make sure to have plenty of tables outside and have them spread out with hand sanitizers all over the place.
Ross, ¿qué más, hermano? ¿Qué más?
All right. Well, NAHB has allowed us to move our double spike month, which is usually held during the month of May. They gave us special permission to push it to June this year. So that we have a bit of a better chance of recruiting for our events, or for our drive. And since we see such a bright future ahead for the Tulsa HBA, we thought to have the My Future So Bright membership drive throughout the month of June. So be looking out for more details in our news flash coming out tomorrow.
I love those shades, Ross. Looks like you got a very bright future. I've got my OSU orange shades on there too. So I look forward to that drive. Give us a shout for more information on that. It's a lot of prizes and cash and trips that can be earned through that drive. So don't miss that out. So watch for the news flash for that. And you can really feel the excitement in the air, Ross. I mean, and while we certainly want everyone to join us for the events, there are within our comfort level. We want to make sure you stay within that. And we want all of our members to know that we've been planning for your return since day one of shelter in place. And I hope everyone has a pen and paper ready to take notes. We have two amazing guest speakers joining us today, and we will have time to ask questions at the end of the presentation. And we ask that you use the chat option in the Zoomcast to ask your questions, and then we'll present your questions to each speaker at the end of their segment. And we're asking that you keep everyone keep your microphones on mute, and so we don't get any kind of feedback during these presentations as well. And for the best experience during this Zoomcast, if you'll select the speaker view option at the top right of your Zoom screen, I think you'll get a much better experience. But to introduce our first speaker, let's welcome back our HBA Executive Officer, Mr. Jeffrey Smith.
Yep, thanks, Pablo. So first speaker today is a good friend of mine, Dr. Robert Dietz. Robert is the Chief Economist for NAHB. His responsibilities include the housing market analysis, forecasting and industry surveys, and housing policy research. Prior to joining NAHB 2005, it doesn't seem like it's been that long ago, but Robert worked as an economist for the Congressional Joint Committee on Taxation. He has testified before Congress on housing, economic, and tax issues. He is a leading expert on home construction analysis and trends, and has been cited and appeared on CNBC, The Wall Street Journal, and other news media. Robert is a native of Dayton, Ohio, and earned a PhD in economics from the other OSU, Ohio State University, in 2003. So Robert, I'm going to turn it over to you and listen to your presentation. Thank you for joining us.
Screen here, which has got the slide deck, and put it into slideshow mode. Yeah, thank you to the HBA for allowing me to walk you through our economic forecast. I appreciate the other OSU. I did a Michigan town hall recently, and as Michigan folks, when they introduced that Ohio State thing, of course, they all booed. So that's a more friendly way of saying the other OSU. I'm going to walk you through the deck. I'll make sure that Jeff gets you a copy of the slides in PDF form after we go through it. But, you know, I think when we're thinking about the current economic outlook as a forecaster, we have to approach it with a lot of humility. This is certainly not the forecast that we laid out at the beginning of the year at IBS, for example. Frankly, I think that's not just true for economists, but for all experts who are making projections right now, including with the virus itself. This is a very complicated scenario. It's new, and we have to take everything with a bit of a grain of salt. So I'm giving you my best guess. I'm sure there are plenty of people who will disagree, and I look forward to your questions. What I've been recommending builders do from a business perspective is to think in terms of 2 months, 2 quarters, and 2 years. I think we're coming to the end of the first 2-month period, and that's a period of time where basically we're under lockdown for much of the country. The economic data are going to be terrible, and there's just really no way around it. It was designed to be terrible by a public health strategy. But we're moving now into kind of a 2-quarter period that I think is going to see stabilization, general opening up of much of the economy, particularly outside areas outside of New York, and the beginnings, the green shoots for a rebound. In fact, we're actually beginning to see that with respect to housing, that mortgage application data, for example, has been up for the last 3 weeks. But I think it's going to take about 2 years for the economy to get back to where it should have been. In other words, getting back to trend. So this isn't necessarily going to be a quick rebound, but I think it's important to note that we do think that housing is going to help lead that rebound, because we're a sector that has clearly a large economic impact, and there's a lot of pent-up housing demand that's waiting to be unlocked. So I put some things that we're watching. We're clearly watching the stock market right now. I think there's a bit of disconnect between Wall Street and Main Street. Main Street is hurting more than stocks would suggest. We do think there's going to be some supply chain issues over this next 2-quarter period. We're hearing about concerns over lighting fixtures, plumbing fixtures. A lot of this is connected to disruptions in global trade. Consumer confidence is down. I'll show you a slide on that. But if we can keep some of this really massive increase in unemployment to less than 6 months, and there's some signs that suggest a lot of these job losses are temporary, that should not have a big impact on long-run purchases like cars and homes. So the forecast I'm going to show you calls for a sharp mid-year decline and then a bounce back after. Now, it's a little unusual. As an economist, I'm used to studying business law and taxes and finance and demography and issues like that, but we're having to study viruses. And one of the things that we've learned going through the scientific data is that, contrary to what the media would have you believe, viruses do not spread on an unchecked exponential growth path. I created an exponential growth path here in red based on some of the early days data for the United States. Well, that's not what we've moved along. The blue line is the confirmed cases, and there's data to suggest the confirmed cases, by the way, is way too low. But that blue line is the confirmed cases that are reported every day. And we're moving along that green line. And that green line is something we call the logistic curve. It's an S curve. It starts out exponential, and then it begins to slow down. Why does it slow down? Well, it's not necessarily due to lockdowns. It's because people begin to take measures to make sure the viruses don't spread. They're more cautious. And then there are also, community guidelines and hygiene efforts and things like that. We've moved along that green line pretty predictably. And I think that's why you're seeing a lot of states and local governments beginning to open things up, because we should see diminishing marginal returns in the spread of the virus at this point. So that's generally good news. It's not to say that the virus is going away. There could be renewed outbreaks in the fall and the winter, and I'm a little bit concerned about a W-shaped rebound. If we have to go back in the lockdown in the winter, but things are slowing down right now. And that does suggest that we should see some gains in terms of reopening going forward. So here's our macro forecast. We have the data for the first quarter. March was terrible. There's no way around it. The first quarter GDP growth number was a negative 4.8%. The second quarter will be worse. We're experiencing that. We're about halfway through the second quarter. Our new revised forecast that I just completed yesterday has the economy down about negative 30% on a growth rate basis in the second quarter. That's that blue line. Again, this is by design. This is not something you can compare to the Great Recession or the recession of the early 80s. This is by design locking down the economy, what damage is being done from an economic basis. It's huge. I do think that the third quarter is going to see some additional weakness, not a lot, but some, because small businesses are hurting, and we do have elevated unemployment. But then you can see those blue bars going into 2021. They're really strong. This is a sign of a rebound in the economy. I think that provided we can keep the economy open, we're going to see a lot of growth in early 2021. And then, as I mentioned, it's going to take about 2 years to get back to trend growth. Now, in the labor market, there's good news, bad news. The good news is essentially that by the end of the year, we should be facing nationally about a 10%, maybe 11% unemployment rate. That's good news because I think by mid-year, we're going to be real close to about a 20% unemployment rate. We're above 14 right now in the official data. But something that's important, it's duration matters. If those job losses can be kept to less than 6 months, I don't think we're going to see big impacts on long-term consumption. If, on the other hand, we have really high levels of unemployment, double-digit levels of unemployment for more than 6 months, this will be a drawn-out recovery. And again, this is why it's important that we open up the economy safely and with prudence, but we need to do so to make sure we protect the nation's small businesses. If you're grading institutions in terms of what they've done thus far to help protect the economy and bridge us to the fall, I think you have to give full credit to the Federal Reserve. They were aggressive. They've been all in terms of reducing rates, starting up what we call quantitative easing infinity, buying mortgage-backed securities, treasury bonds, doing everything they can to prevent a liquidity crisis. And they've succeeded. If you had said, could you have an economy that saw a 30% expected growth rate, negative 30% expected growth rate, and you did not face a liquidity crisis, and the stock market was in decent shape, you would have to give credit to the Federal Reserve. They have accomplished their task. I think we can take issues with some of the other government responses. Some have been good, some have been bad, but the Fed's actions have prevented a financial crisis. We're just going to have to deal with the economic fallout of shutting the economy down. So what does that mean then for our interest rate forecast? We think the 10-year Treasury is going to get back up to about a 1% rate as we move through the 2-quarter stabilization period. And then I think it's going to kind of remain there for about 2 years. I think the Fed actions are going to remain engaged, and that should help stabilize the 10-year Treasury. What does that then mean for the 30-year fixed rate mortgage, which is in red here? I think it's going to level off at about 3.5%. And I think it's, again, also going to be relatively stable. These are really historically low rates. The real challenge for buyers is going to be job security and their ability to save for a down payment to be able to purchase a home. But I think we're seeing a lot of renewed interest in housing, and those low interest rates are one of those reasons that we think housing will help lead a rebound in the economy. The other thing is that we had a lot of momentum going into 2020. This is the national home ownership rate. You can see it's been trending higher since 2016. And in fact, after the housing soft patch that we experienced at the end of 18 and the start of 2019, it really kind of rebounded back to that trend line. I think for much of 2020, it's going to be relatively flat. Maybe we'll even see some declines, but there's a lot of pent-up demand for housing. And I think what you're going to see is a lot of people who are currently living in apartments, if they can financially, they're going to be seeking single-family homes for purchase because of the experience of the virus, being under lockdown, and maybe concerns about public transport and population density. All right, what are the supply side issues that we're tracking? We've been doing a lot of online polling of builders. In early April, clearly the issue was traffic of home buyers. Some recent data suggests that traffic has picked up over the last 3 weeks. I think it's still down considerably year over year, but that's not a surprise to see that at the top of the list in terms of impacts. We've seen concerns from builders about the time it takes to get building inspections. As I mentioned earlier, we're watching the supply chain in terms of access to building materials. I think that will be a growing concern over the next 2 quarters. And then the last one is particularly important for small and medium-sized builders, which is the ability to obtain builder financing in terms of A, D, and C loans going forward. That's going to be a limiting factor in terms of how fast the construction rebound can occur. So in terms of inspections, some of our survey data offers actually good news in terms of flexibility being offered by local governments. For example, right now, 32% of builders work in jurisdictions where third-party inspections can take place. That's particularly important if you've got government staff, for example, that are working at home and not available to go out and undertake engineering inspections. And then a real surprise to me, 24% of builders say they can use virtual inspections. And 80% of that total, 20 percentage points, is due to the virus itself. In other words, the current economic situation. I would be definitely more optimistic about the ongoing path of the construction recovery if we could see additional gains in terms of the availability of virtual inspections, which is just another way to offer flexibility and make sure that construction can continue going forward. I mentioned the availability of A, D, and C loan conditions. This is data we just put together at the end of last week. The red line is an NAHB survey of tightness of lending. Larger numbers here are actually bad news. So you can see that lending was particularly tight in 2008 and 2009. I put up a separate Federal Reserve survey that does kind of a similar measure as a counterpart. But you can see at the very first quarter of 2020, that red line jumps up. And in fact, right now, lending conditions for builder loans and land developer loans are as tight as they were in mid-2011. That is a concern going forward, and it's a recommendation I'm making to builders to make sure that you're in touch with your financial institutions so that you can gauge the availability of lending and whether any of those terms are changing going forward. Of course, our benchmark survey in terms of building our forecast is the NAHB Wells Fargo Housing Market Index. It's the HMI. In April, it fell to a level of 30 from 72 in March. That was the biggest drop that we've had in the history of the index. And it correlates pretty well with single-family starts, which I put in red here. The HMI is pointing to about a 500,000 or a little bit higher annualized pace for single-family starts in the second quarter. And so I use that data to construct our forecast. And here's the national forecast. We're looking in 2020 for about a 19% decline relative to the 2019 total. I'll tell you that some of the recent data suggests that maybe that's a little too low. But I'm being conservative with the forecast. I'm basing it off of our surveys and some of the challenges that we identify in the building market right now. You can see that the recovery in single-family building is a little more V-shaped. So I'm U-shaped in terms of a slower recovery for the overall economy, but a quicker recovery for housing. And again, that's due to that pent-up demand. And then in 2021, I think once we complete that 2-year repair period, we get back to trend. And we continue to grow along that long-term growth path that's been in place since the Great Recession. Something that's really important to note, as leaders of the industry, if you're talking to policymakers, talking to journalists, the big difference for the housing market going into the recession of 2020 compared to the Great Recession is that we're underbuilt. We're not overbuilt like we were going into the Great Recession. So this is just historical data. You can see in the 80s, 90s, and early 2000s, we were building about 41,000 single-family homes per million population in the US. And then over the course of the last decade, that rate falls way off to about 21,000. So we have a housing deficit in the US of about 1 million homes. So again, underbuilt, which means that we're one of those sectors that has economic potential and some real momentum that we can build on during a rebound. In terms of the geography, and this comes from our home building geography index, I tried to identify some areas that I think we're going to see above trend growth. And really, I think it's going to be in some of these ex-urban markets. These counties in blue, which include a few in the Oklahoma area, represent about 9% of single family construction. And I do think one of the trends we're going to see coming out of this is people are willing to decentralize. They're going to move further out because of the fact that they can telework more and there's going to be additional concerns about relatively high density environments. So the exurbs in particular should see a lot of single family construction growth. In terms of apartments, apartment growth was really strong in 2019, strongest year since we've had since the Great Recession. You can see that spike near that vertical red line. I'm expecting a pretty dramatic decline during the mid-year and then a return back to trend, just like with single family construction, because household formation should continue once we get back into a rebound mode. And then remodeling, the third leg of the residential construction sector, we're expecting about a 7% decline under our new forecast. It'll be weakened a little bit by existing home sales, but there are some trends in terms of housing that should really help support remodeling. I just wanted to point out, for example, the share of people who want a home office. It's been about 2/3 of home buyers who have looked for a home office. I think that trend is going to increase due to the fact that more people have worked at home for a long period of time. And similarly, home gym, exercise room, that had been trending higher since 2003, up to about 40% of people. I think we're going to see a real jump when we do the 2020 survey in terms of people looking for a home office. So those are good trends for remodeling activity, and I do think it's going to increase going forward. And then lastly, we talk a lot about the virus. There are other factors affecting the macroeconomy, clearly oil prices, for example. But this is an election year. And what we put up here is a map of red counties, I was going to say states, red counties and blue counties based on how they voted in the 2016 election. 61% of single family construction takes place in the red counties. And in 2019, the red counties experienced positive single family construction growth, while the blue counties experienced negative residential construction growth. Now, usually when I do this at a kind of a state level, I point out the blue and the red. Oklahoma, well, it's all red. So, but this is a reminder that zoning rules and regulatory impacts do have a big impact and will help shape the rebound in the economy, because they'll help shape the cost of construction going forward. Those blue counties tend to have higher regulatory burdens. So wrapping up, we've modeled about an 8-week pause of the economy. I think we're coming to the end of that. The virus spread will end. It's slowing right now. We do risk a little bit of a breakout in the fall. That could cause a W-shaped recovery. We'll take that when we come to it. If you're looking for unexpected impacts, it's possible we could see a baby boom, which would be good for housing demand. Other people have said maybe we'll see a rise in divorces due to the fact that people have stayed home for a long period. Either way, baby boom or divorces, they'll increase housing demand. Keep in mind that 2-month, 2-quarter, 2-year way of digesting the information. But generally speaking, we've got some weakness ahead of us. And then I do see a fairly quick rebound for housing as we come to the end of 2020. And with that, I want to thank you very much, and I'm happy to take any questions.
All right, Dr. Dietz, thank you so much, and amazing information. You talked about possibly a W-shaped rebound. Do you anticipate an additional round of stimulus benefits in December if we are seeing another?
Yeah, in fact, actually, right before I logged on to this webinar, I was working with Jim Tobin, NAHB's chief lobbyist, and Dave Ledford, our regulatory affairs folks. They're working on stimulus bills that are being proposed to Congress right now. So there's going to be additional rounds of fiscal stimulus. Some of that will be good in terms of getting resources to state and local governments, for example, making sure that we get some small business assistance. There's a lot of focus right now on rental assistance, and some of that has not been perfectly crafted. We're going to have to work on that. But, this is all kind of a reminder, membership matters. Thank you for being a member of the HBA, and your representatives in DC are really working on some of these stimulus efforts right now.
A follow-up to that, what kind of help do you think? I mean, we've been practicing social distancing. I think we're washing our hands more than we ever have in our lives. What effect do you think that'll take if we do have that additional hit come November, December? Do you think it'll be less impact, or did it help us any?
My worry is if we see breakouts in New York City come the fall and the winter, that the lockdown could be more aggressive than what we just experienced. Now, that's a fear. The New York experience really has shaped the national experience. So I think one of the things that's really going to have to happen is state level officials are going to have to judge what they do in the fall and the winter with their own local data. And that's going to be important. Do not let the media lead the exercise in this. New York's experience is going to be different than Georgia's or Oklahoma's. But on the other hand, I do have hope that science and capital is eventually going to beat the virus down. That's how the US has beat challenges before. I think there's promising antiviral treatments. I think a vaccine is going to come earlier than people think. It's not going to come in 2020, but maybe by 2021. But in the meantime, we're going to see a lot of changes. And it includes things like larger home size. And I think we're going to see some shrinking of retail real estate, which does offer some redevelopment opportunities for home builders to take basically land that had been occupied by office space or retail and develop new housing on it.
Awesome, thank you. Does anyone else have any other questions for Dr. Dietz? We want to thank you so much for taking the time to join us. Just amazing information. We are recording this session, so you'll be able to take a look at the slides at a later date as well. If you have any interest in those as well, we'll visit with Dr. Dietz about securing a copy. But what we found in the past, things change so quickly. Sometimes the slides become outdated before we're able to even get in people's hands. So I understand how fluid this whole forecasting is, and we appreciate the efforts that you do for us on a local level and represent us and the national level. So thank you for joining us.
Thank you.
Ross?
All right. Yeah, thank you again, Dr. Dietz, for coming. That was a great little taster for what we expect and hopefully a little preview for what we expect to have out in September when you come back out for our sales and marketing economic forecast. But I will go ahead and introduce Jeffrey Smith, who is going to introduce our next guest speaker. So Jeffrey, I'll turn it over to you if you don't mind.
Yeah, thanks, Ross. So our next speaker is Sean Copeland. Sean is the Oklahoma Secretary of Commerce and Workforce Development, Chairman and CEO of Regent Bank, and Tulsa HBA member. In his volunteer role as Secretary of Commerce and Workforce Development, Sean oversees 36 state agencies who lead the economic development, community development, and workforce development efforts for the state of Oklahoma. Under his leadership, the state has attracted over 65 new businesses since 2019. Governor Stitt has now tasked Secretary Copeland with leading our business and economic recovery from the COVID-19 crisis. So Sean, I'll turn it over to you.
All right, thank you so much, Jeff. Hey, it's good to see you guys. And that was actually a super interesting presentation by Dr. Dietz. I enjoyed that probably more than anybody. What I'll do, guys, is I thought I would spend about 15 minutes talking through information from the state perspective. I'm going to share a little bit about the COVID battle that we are in. I'll talk a little bit about our economic viewpoint. Pretty much unemployment is in my area, so is Department of Commerce. And so I'll try to give you a real quick overview of what we're working on and trying to do, how you guys can help us, which you can. I could really use your input on a couple of things. And then we'll just open it up for Q&A. I'll have a pretty hard stop at 2. I've got to lead another group at 2, but we'll get through as much as we can while we have time. So on the COVID front, we're at 4,732 cases right now. It is important that we've had 3,423 recoveries. We have had over almost 107,000 tests done within the state. So our testing has ramped up drastically. So you're going to see our new cases ramp up drastically as well. And what we're seeing is from anywhere from a 5 to 6% positive percentage. So when we do testing, 4.91, I think, was the number yesterday. We were actually a little bit under 5%, but about 5% of our people that we test end up being positive. You contrast that with 20, 30, and 40% in some states. And so we've been really very fortunate in Oklahoma. And that is why you hear the governor say all the time, we have to look at our data, look at what's happening here in Oklahoma, not what's happening in New York or on TV. We have 190 people currently hospitalized. That's the lowest for COVID. That's the lowest that we have seen since this started. We peaked at 560 people back on March the 30th, and I'm on the board for Hillcrest here in town, and they're mirroring, their experience is mirroring what our numbers say. They peaked in late, I think they had 22 or 23 COVID cases in late March, and now have like 2 or 3. So I really do feel like when you look at and we meet every day, there are 5 of us that kind of have elevated cabinet roles, and then you've got the health department people, the governor, and we meet every day from 4:30 to 5:30 and review the data, and it's an accountability meeting for how we're attacking this. And the numbers really have been very consistently declining as far as cases, and our outcomes seem to be improving. Our total deaths are at 278. The average age of those who have passed away is 74.3 right now. The average age of those in a hospital is 64.8, and the average age of those that have had a case is 50.8. Let me mention this to you all because I think you'll find it very interesting. If you go to the Oklahoma Department of Health COVID site, there is about 2/3 of the way down the page, you're going to see a little link, and it says Executive Order Reports. It's not real obvious that you can click on it, but you can. It's all public, and there is a ton of data there. So if you ever want to really dig in on testing and supplies and hospitalizations and availability within hospitals, it is all right there under those executive order reports. There was a New York Times article that came out a couple of days ago that I thought was fascinating. I posted it on social media, but it hasn't been widely shared outside of that. And it showed that Oklahoma, our total deaths this year are lower than our total deaths at this time last year. And if you look, about 42% of our deaths are within long-term care facilities or nursing homes. And if you look at their deaths, there is not a statistical difference between this year and last year. So I am not an epidemiologist, and I'm not pretending to interpret the data for you, but I just think that's very, very interesting that, we know this is real. We know the cases are real, but thankfully, as an entire state, our deaths this year, according to that article, and I haven't had time to confirm it, but it's from CDC data, is actually lower than they were last year. The Lifetime Fitness CEO, the governor, and I had a call with him probably 3 or 4 days ago, and last Friday, he actually came to Oklahoma City. They opened up their first Lifetime Fitness gym in the entire nation in Oklahoma. And it was really for 2 reasons. One was because they liked our response, kind of our data-driven response to opening back up, but they also had surveyed all of their members nationwide, and Oklahoma members, and they're opening up in Tulsa, I think, this Friday, if I'm not mistaken, but their Oklahoma members were the most ready to come back of any state in the country, which I think is interesting. And I hope this will bode well for our home builders here on site. I actually just had lunch with a buddy of mine that's getting ready to start building a home right now. So it didn't seem to bother him at all. The Dillard's CEO, the governor met with him on Friday as well. Same thing. These are some of, if not their very first stores to open, and these are their best performing stores are in Oklahoma. So we hope that this is an indication of things to come, and that the bounce back in our state will be a little quicker than maybe the national bounce back will be. Our COO at the state level did an analysis, and this isn't official, but John Budd is a really, really sharp guy, and he, in his spare time, He says one of his hobbies is doing data analysis, which tells you intellectually where he and I fit on the ladder, because I don't do data analysis in my spare time. But what he did was he looked at all the states and did an extensive study of what are these cases based on? When you're looking at the case numbers, why are they so much higher in certain states than others? And why does it feel like what we're experiencing in Oklahoma is just different than what we're seeing on TV? And let me share with you what he learned. Number one is population density. So clearly, we're not as dense of a state as a New York or a California or New Jersey, and those types of states. Number two is public transit, which I never would have really thought about, mass transit. So if you think about riding the subway back and forth from New Jersey to New York, I mean, that's been a very big factor. We don't have much public mass transit here. We do have a trolley in Oklahoma City, but it's empty most of the time. And so I think that that's why we're not seeing a whole lot of spread there. The percentage of people under poverty level is next, which we obviously have our fair share of those. And that's because normally they don't have the health care that others have. And also they tend to have other, what they call comorbidities, other diseases that tend to promote COVID-19. Trips per capita. So here's another one that was interesting to me. Trips out of the country in particular. So the more people within a state traveled or do travel outside of the state and outside of the country, the more cases that you saw. Temperature, so the hotter the better, and then the age of the people within the state. But the age actually was on the lower end of this analysis. So we're actually a fairly young state, but within our nursing homes, we are obviously much older, and that's why we're seeing so many cases there. As far as our non-long-term care cases go, what we are seeing is diabetes and pneumonia are the two primary gateways that tend to lead to challenges with COVID-19. 82% of our deaths have been over 65. As I mentioned, 42% have been in long-term care facilities. 4.9% of our tests have been positive. And so anyway, just a little bit of data there for you. Our PPE situation is much, much better. About a month ago, it was looking pretty frantic. We were all working the phones and trying to figure out how to get masks and gowns and hand sanitizer and, all kinds of ventilators, that type of thing. And thankfully, we're in really good shape. We've got about 17 days of PPE on hand. And Oklahoma is also one of the first states in the country to do the saliva test instead of having to send the big swab up your nose, which isn't real pleasant. Unemployment-wise, unfortunately, this is a very new statistic, but we're estimating our current unemployment rate at 18%. EOSC falls kind of under my umbrella, and I spent a lot of time this morning talking to our director there. We are having a significant issue with getting all the claims through, and it's just because of the enormity of the number of calls. OESC used to get 300 claims, used to have 300 claims a day before COVID. We have had days close to 22,000 claims a day as we've gone through this experience. We do think, and Dr. Dietz didn't mention this, but I do certainly think that some of our unemployment is a little bit elevated because unemployment claims are how do I say, a little bit more lucrative today. So if you think about the fact that part of the stimulus program, we pay people an additional $600 a week on top of their regular unemployment claims, that gets you to about a $15 an hour job roughly. And so I know a lot of employers who their business is slower. Maybe they wouldn't normally lay the individual off, but they are because they know that they're going to make basically the same thing through unemployment that they are on their payroll. So it'll be interesting to see when the PPP money runs out and when this enhanced payroll will lapse the end of July. So the $600 a week goes away the end of July, and it will be interesting to see what happens at that time, or if that is going to be extended. We just don't know yet. We've paid out $450 million in unemployment claims so far this year. It's really mind-boggling. We've had about 431,000 claims processed. Like I said, we maxed at about 22,000 a day. We have had almost 8,000 fictitious unemployment claims, and there is if you go to the, and we have, I won't bore you, but we have tons of resources trying to figure this out. But the challenge is we did away with the 10-day waiting period, as did most states, whenever somebody was filing for unemployment, so we could go ahead and get them help quicker. Well, during that 10 days is when we would call and verify and make sure that the request wasn't fraudulent, and we don't have that right now. And so it's just, and frankly, with the immense volume, I don't know that we have the people to make those calls anyway. We're just trying to handle as many calls as we can coming in. So huge focus, huge resources toward this. We know it is an issue, and there's an email. It's fraud@oesc.state.ok.us, that if you or you know of anybody that is a victim of these fraudulent unemployment claims, all they need to do is email that email. And again, it's fraud@oesc.ok.state.us. We ranked number 7 in the country for the first round of PPP dollars that came out. Hopefully many of you were able to take advantage of this. I know we did. As was mentioned, I'm in the banking business here in Tulsa, and we did a little over 1,200 PPP applications, a little over $100 million. So it was very active around here. It started to slow down now, and there's still about $100 million available in PPP funding. And so if any of you, or if you know someone that hasn't filed to get the 2.5 weeks of payroll, it's not too late. These dollars have gone much slower the second round than they did the first round. So I just wanted to mention that to you guys as well. In the CARES Act, there was $310 billion allocated to PPP this last phase. There was $60 billion allocated to the SBA disaster loan program. Unfortunately, that is only for people that had previously applied. So they're not taking new applicants into that program now. That's the long-term line of credit piece that you could get. So if you applied previously and are just awaiting your dollars, there's a very good chance you'll get funded there now that they have new dollars coming into that. We have about $1.25 billion in federal stimulus that's going to be coming to Oklahoma. Now, about 45% of that money will go directly to cities and local municipal governments. 55% will be decided by the governor, kind of how it is allocated. We know that a large portion will go to health care. We know that a large portion will go to OESC for unemployment, but we're hopeful that 50 to 100 million will be available for our small business people. And so one question, and at the very end, I'll give you guys my email, but I mentioned that I have a couple of favors, and I really mean this. I was actually really glad that I was going to be talking with you guys today. One favor I have is, let's assume that we have $50 million that we can allocate out to business people to help them get through this time. Could you, if you have thoughts on how you would allocate those funds, what you would do to best help the people of Oklahoma and the business people get through, I would love to hear that, because we are putting together our plan now for the governor, and we just want to do the best for our businesses that we can. So I'll give you my email at the end, and if you guys could give me your thoughts there. The other thing at 2 o'clock, the reason I've got to jump off is I am leading it's called the Bounce Back Task Force. And this is a group of 15 business and government leaders in Oklahoma where we are working on how do we relaunch the Oklahoma economy faster? You know, how do we come out of this more quickly even than the estimates that Dr. Dietz mentioned? And so again, I know there are a lot of I know I have a lot of good friends on this call, and I know there's a lot of good minds involved in the home builders. And so if you guys have ideas, if you were the governor, if you had thoughts for what you would do, again, please email me those thoughts. We are looking for the best ideas to get us ramped up, and we're going to get him a final set of recommendations in a couple of weeks to try to help us recover. We were, as you saw, us in Georgia were really the first states in the country to open back up. It does not appear that we are seeing negative repercussions from that as far as cases go. We're watching those every single day, and so far so good. Phase 2 is going to open up here shortly, and I'll cover that here in just a moment as I close. We are doing industry calls every Wednesday. So if you all want to, it's similar to this where I try to give an update on everything that's going on within the state and just answer Q&A. So let me give you these call times, and if you're interested in joining us, the numbers are at the Department of Commerce website, which is okcommerce.gov. But our times are every Wednesday, 9 a.m. we have a manufacturing call. 1 p.m. we have economic development organizations and nonprofits. 2 p.m. we have services, and so that's really probably where you guys would best fit. And at 3 p.m. we have retail. So if you're interested in calling into any of those, we have them every Wednesday, and it's very, very similar to this format. We have we rolled out a manufacturing reboot program where we issued about $5 million in grants to our manufacturers to try to help them pivot and see success going forward. We have now rolled out a bounce back program. So I would encourage everyone to take a look at the Oklahoma Commerce website. These are grants from $50,000 to $150,000 based upon employment and investment and kind of your projected contribution to the economy. So I would encourage you to take a look at okcommerce.gov and look at the bounce back program. And then the last thing I'll cover real quick, and then we'll open it up for questions, is of course our Open Up and Recover Safely plan. We've been through phase 1, as you know. We're going into phase 2 in 3 days. All the data continues to look really good, so we feel good about moving into phase 2. Phase 2 is organized sports activities are back open. Funerals and weddings are back open. Bars are back open at a lower, at 50% capacity or less. Children's nurseries at churches are back open. And we encourage people to resume non-essential travel during this time as well. Safer at Home continues for people in our vulnerable population, and so does the nursing home visitation, the prohibition of visiting people in nursing homes. That continues right now. Phase 3, which would start up on June 1st, opens back up summer camps, so church, school, and sports summer camps, larger conferences. I think you guys' dates are just right on your events that are coming up, because on June 1, larger conferences, larger public gatherings, festivals open back up, and that'll pretty much get our entire economy opened up. Interestingly enough, 93% of the businesses within Oklahoma were deemed essential initially. So this open back up is actually just dealing with 7% of the businesses. So I think it's a little bit more of a, a psychological thing that it is an actual, because we kept a lot of businesses open while many states did not. So we were a little bit different there. A couple of things to remember. No business has to open before they're ready. These are simply guidances that the you know, the governor is laying out, but nobody has to open up before they're ready. Businesses can be more strict than what we deem in our guidances. But we just feel like between getting our economy going back and between some of the kind of mental health issues we are seeing, we just really feel like it's time to begin a measured, kind of gradual reopening of our economy. So with that, Jeff, why don't I stop talking and open it up and see if there are any questions of anyone that I can answer. I'd actually much rather answer the questions you.
Yeah, Mr. Secretary, thank you so much for joining us. And I think, Ross, we've been having some issues with the chat. So if you have a question either for Secretary Copeland or for Dr. Dietz, just unmute your identify who you are and what company you're with, and go ahead and ask your question, if you will.
Let me just mention this while you guys are thinking about it. You know, we believe that we're going to see a 90-day bounce back. That is our belief, based upon the initial response, based upon people getting back out now. We think that we're going to see a material difference in the way that people feel and act and respond by mid-August. Now, I totally agree with Dr. Dietz. Are we going to be back to where we were previously? No, I actually think he's right on in his kind of early 2021 feel. But I just think that Oklahoma opened up faster. I think we are seeing that the psyche of our people is a little bit more brave, is probably not the best word, but we're just a little bit more willing to get out there maybe than others. Our numbers continue to look good. We're going to continue to publish those, you know, very transparently. And so we are just of the belief that, you know, come August, early August, we're going to begin to see things feel much, much more normal than they do right now.
Awesome. Anyone have any questions?
I actually have a question, if you don't mind me jumping in, Pablo.
Yeah, Ross, please.
Secretary Copeland, you had mentioned that there were funds available in the PPP still. Do businesses use the same applications to apply for those, or is there a whole new application to get the reserve of those funds?
That's a great question. The same application. So you can use the same application, and again, remember there's PPP available for those that have W-2 employees, but there's also PPP for those that are sole proprietors, 1099 as well. So same application, Ross.
And Secretary Copeland, if I may, our mayor here in Tulsa has been very adamant about wearing masks when we're out and about, out of respect for our citizens. What are you seeing the trend statewide?
Yeah, we don't see a whole lot of masks in Oklahoma. As I go around the state, and you can probably sense there's a little bit different in the tone of Mayor Bynum, who's a lifelong buddy of mine, and Governor Stitt, who's a lifelong buddy of mine. Governor Stitt's just a little bit more of a personal responsibility. You do what makes sense to you. Let's open it up. You know, that's just kind of the way that he is wired. Mayor Bynum is obviously a little bit more conservative and careful, and you know, each person can judge who you know, where they fall. But honestly, you know, you see a lot more masks, frankly, in Tulsa than you see in Oklahoma City. When I am over there doing my work at the Capitol, you don't see as many there, and you definitely don't see as many outside of the two metros. I guarantee you, you go to any Walmart in any small town in Oklahoma, you wouldn't even know that there was a COVID-19 crisis. I'm telling you, everybody's bunched together and there aren't any masks anywhere to be found. So it depends on kind of where you are, I think, within the state.
That's awesome. Jeff, final word to you. Do you have any questions?
No questions, Sean. Thank you very much for joining us today. We appreciate all you're doing for the construction industry, volunteering your time as Secretary of Commerce. I know it takes you out of Tulsa quite a bit, so we definitely value your time here today. I know Dr. Dietz, I think, already jumped off of here, but like Ross mentioned earlier, Dr. Dietz will be in Tulsa, I think it's September 29th or September 30th for the Sales and Marketing Council Economic Forecast, as long as he's able to travel. So that'll be a more extended forecast and more local version instead of the national short version that we heard today. So hope you all are able to join us that day. Again, thank you everybody for being here with us today. Pablo and Ross, I'll turn it back to you guys for just the last word.
Yes, thank you. Thank you, Jeff.
Guys, Pablo, if you don't mind, real quick before, and then I'll jump off of here. I just want to tell you guys this, because I know you guys, this group really thrives on growth and people wanting to buy and build homes. Let me just tell you this. You may have seen where Tesla made the comment, Elon Musk, nationally, that they're moving out of California and they're upset, and all that stuff. You guys might just find it interesting. We had an excellent call this morning, the governor and I did, with executives of Tesla at 10 o'clock. Wow. And so we have been working with them to recruit a Cybertruck manufacturing plant to Oklahoma over some time, and the timing has worked out really well. So I cannot get into a whole lot of detail, but we are in the hunt, and we have landed 12 new businesses during this time since we've been in COVID, and a lot of those have been from California. And so I think people are attracted to Oklahoma, during this time, in particular in the way that we treat our businesses, which is very different than the way other states do. So I do think there's some bright spots. I know it's very, very difficult right now, but I just wanted to share a little bit of exciting news before we jumped off the call.
Well, that really charged me up. I tell you what, that's awesome. That's awesome. Great news. Before we get out of here, I do want to mention one other thing. Again, thank you, Mr. Secretary. But we are going to be having a summer show. I don't know if that'll show or not, but we're going to be having a summer Tulsa Home and Outdoor Market on August 21st through 23rd. So if you're wanting to exhibit in that show, get with Morgan, if you will. And you probably have already received the postcard, but space is going fast. We had quite a few applications already come in today. So make sure you jump in on that. And thank you, Tulsa HBA family, for joining us as well. We look forward to seeing you at one of our upcoming events that we have planned. And Ross, get us out of here, man.
Yeah, I think that is gonna wrap it up for us. So we'll see you all. We have 2 events next week. Like I was saying, we have Sales and Marketing and Professional Women in Building. So keep an eye out on their Facebook pages for those events. And then if we don't see you at those, then we will see you on June 9th for our next June GMM. And with that, I think we will sign out. Pablo?
Yeah, Pablo Perez, so glad you joined us. And until we can be together again, good day.